Hello, it's Robert Miner with Dynamic Traders Group with our daily DT 5-minute update and trade strategy for our Twitter and YouTube subscribers. If you like what you hear today, the education and the trade strategies that you learn, check out High Probability Trading Strategies. My book, if you don't already have it, includes about 2 hours online of educational videos that go along with the book. Fantastic learning experience for very inexpensive. And of course, check us out at dynamictraders.com, our regular DT reports. This is just a fraction of the video that the regular subscribers receive. Well, let's get started. We're going to take a look at several markets I want you to be prepared for next week. This is the ES Daily. Real simple, real quick. Friday, we made a dual look back daily momentum bear reversal. We made a 3-close reversal. The trend should be sideways to down for 3 or 4 days. What we're going to be looking at in the days ahead, if we make a close below 29.51, that's going to be significant. It's going to avoid an impulsive bear trend, impulsive bull trend, but I'm not forecasting that's going to happen. I'm just looking to trade. I'm already short. Our subscribers are short. We ought to be sideways to down for a few days in all the stock indexes. This was a signal that we were waiting for the last couple of 3 days, and it was made on Friday. This is gold daily, and we've been looking for a buy signal the last couple 3 days in gold and right up through this Friday. However, Friday was an inside down day, and the fast line of our DT oscillator reached overbought. We're within a couple of days of completing a daily high in gold, and I avoided any buy strategy. I was looking to buy myself the last couple of days. We didn't make the signal, particularly on Friday, and now that the daily momentum fast line's overbought, we're near a daily high. Got a good possibility of turning around and making a new low before we complete this wave 4 correction. I've had this question mark for a couple of weeks. It's still a question mark. We haven't confirmed this low. And now more than likely, we're going to roll over to the downside within the next 2 to 3 days. So I'm canceling all my buy strategies. Now to one of my favorite markets, the euro. This is 240-minute data. We've exceeded on Friday what I anticipated would be the maximum on the upside. This is the end of wave 5 and the maximum for end of wave 5 of 5, typical, and probably the maximum for the end of wave 5 target zone. We just traded above it slightly before the close on Friday, or into the close near the high of the day. So is that really bullish? Well, more than likely, we're going to make a daily high, and it's going to be finished by Monday or Tuesday at the latest. I think by Monday we're going to turn around. But we're just going to be followed by a corrective decline, 3 to 5 days sideways to down for a corrective decline. Right now, our 240-minute momentum is real reliable. When they get overbought like this for several days or several bars in the 240-minute data, we're real near that top. And the reason that's significant is the daily momentums have been overbought for several days. So regardless of this big up day, we're probably going to reverse around the early part of next week, if not on Monday itself, and then be sideways to down for a few days. That should be a correction followed by a continuation of the bull trend. I did a special update a few days ago on why more than likely the euro is making a multi-month low, the dollar making a multi-month high, and we just had confirmation after confirmation this past week, and we'll be on top of this in the days ahead. But right now, upside's probably pretty limited, sideways to down for a few days before we continue this bull trend. Bonds and notes are in the same position. What's significant this past week, they made in our DT oscillator weekly momentums made bear reversals. And that indicates that we should have further on the downside to go before we complete a weekly low. We should have, the significance is we should have 1 to 2 more weeks sideways to down in bonds and notes. That's typical follow through That would take us right in to the Fed announcement on October 30th. I'm not forecasting that's going to happen because I trade, I don't forecast, but that'll be an interesting setup if that should occur. Right now, this is a daily data. The daily momentums are bullish and not overbought. That would indicate we got about 2 more days sideways, 2 or 3 days sideways to up before we roll over and continue on the downside. I wouldn't look for a buy signal in bonds because the upside's probably pretty limited. And the next bear reversal in the daily momentums will put the daily and weekly momentums in sync for a dual look, or not dual look back, but a dual time frame weekly and daily momentum position to continue on the downside. That's the real trade a few days ahead from now in the next week when we make a bear reversal in our DT oscillator. That should be followed by a resumption of the trend to a new low, and we should eventually come down and test or exceed the September low, more than likely. That's what the technical position is telling us. So certainly not a time to be buying notes or bonds, more a time to be looking for to add to short positions for a probable continuation of the bear trend. Well, that's it for today. Hopefully you got some good information and some good trade setups to be prepared for next week. Check us out at dynamictraders.com or DT Reports. We give a lot of value for a very inexpensive price. Take care. Be back with you sometime next week.